Hello, fellow traders. Certain things move the market more so than others, and one of those things is the Consumer Price Index announcement. And on Thursday, June 11th, the announcement was set to be released at 8:30. And the forecast was for the Consumer Price Index year after year. The forecast was 2.4%. Ultimately, when the announcement came out, it was exactly what the forecast estimate was. And so how did that affect the market? Now, as I said, the Consumer Price Index generally moves the market. So why should the market move if the announcement was exactly what matched the estimate? And so it really shouldn't, but look how the market reacted to the announcement at 8:30. Right over there, market shot up wildly and then moved forward into the day, and I have the previous day's close set up at that horizontal line on my chart at 60.45. And so that's equilibrium. That's the gap. And the gap trade is one of my favorite trades because it closes 70 or 75% of the time. But looking at this chart, how do we know where the prices are going to go? Because the only thing that traders need to know, should know, must know is where are prices going. And so for that, we use a couple of our indicators. I use the Taylor Trading Calculator because it's very accurate as to the range. And I don't have it drawn out on my chart over here, but I'm going to put it on the chart in a moment and show you why I use the Taylor Trading Range to place my trades. And so I'm going to stop this. In addition to just having indicators, and even the Taylor Calculator, the Taylor Trading Range is an indicator, a very good and a very accurate one. You really need to know how to trade, and that includes the psychology of trading. Why do most people fail at trading? Because, first of all, they don't know what they're doing. They think it looks easy from hindsight, and looking from hindsight, it does look easy. But let me point out a couple of things on this chart. So first of all, the market opened up right about over here at 60.55 and immediately closed the gap. Closed the gap down at 60.45. So a 10-point gain if you jumped on right at the open and anticipated that the gap would close. You made 10 points. You could basically go home if that was the opportunity and you were happy with that level of income. And that's fine. But in looking at how the market trades and knowing what to look for, you see these two candles right over here, the two opposing candles. This is a dead giveaway that the market is going to trade in the direction of the second candle. This is a 3-minute candle on this chart, but let me show you something more that can more plainly illustrate why the market is going to go up here. Most traders study candlesticks. Don't necessarily know what the relationship of candlesticks is, but they look at candlesticks. They think they know. But these two candles, these two opposing candles, are a dead giveaway to me. And I'm going to show you why I say that. I'm going to change my time frame to a 5-minute candle. And here's the 5-minute chart, 5-minute candle, and look at this hammer. Look at the hammer that sets up here. Dead giveaway that prices are going to move up. And sure enough, they did. They stopped right over here at about 60.65. Why did they stop over there? I don't know. I do know, but I'm going to show you why in a minute. And so then prices dropped back down to equilibrium, went slightly below it, up a little bit, and then down further for the day. But where are prices going to go? Well, I submit to you, my fellow viewers, that prices will virtually always trade within the confines of the Taylor Trading Range. And I'm going to place the trading range on the chart, and I'm going to prove it to you. Here was the trading range for Wednesday, June 11th, okay? And the prices tracked well within, or almost exactly within, the forecast trading range. And the trading range for Wednesday, June 11th, I'm going to put it up here for you, was right here, 42 points. 42 points was the range, and that's where the market traded. And the market virtually, as I said, trades almost every day within the Taylor trading zone. And here's Thursday, June 11th. I'm going to go back one day to Monday, June 10th. I'm going to go back, that's Tuesday rather. And here's Monday, June 9th. And here's Friday, June 6th, well within the trading range, okay? Another day, Thursday, June 5th, there's a week. Another day, almost always trades within the confines of the tailored trading zone. Now you have to know when to play it. For instance, I teach in my course that along with the trading zone, you need to know the 6 trade setups: gap, support and resistance, trend, time and price, momentum, and candlestick. And as I've shown you in the Wednesday, June 11th chart, this candlestick, this is one of the 6 trades, the candlestick. Now, this hammer is very evident on the 5-minute chart, maybe not so evident in the 3-minute chart, where I like to trade the 3-minute candle. But I always know when I see 2 opposing candles, virtually the same length, that the market is going to trade in the range of the second candle. And that's where it went. And you notice that the price is traded virtually entirely within the tailored trading zone. And so taking a trade here with the hammer up to, and where do you get off? I said, where do you get off? You get off where the indication of the tailored trading limit is reached. And the limit was 60.61, all right? And I get that from the Taylor calculator. 60.61 was the upper limit, 60.61. You see it right there. And I put these numbers on my chart. Very easy to do. Just enter the 4 numbers into the calculator. Everything else is calculated out automatically. You only have to enter the 4 numbers each day. And I even send them to you if you have the Taylor calculator. I have a service where you can get these numbers emailed to you each evening after the market closes, so you don't even have to bother looking up the numbers. I do it automatically for you. And so it's really easy. So learn the Taylor calculator, use the gap trade, learn the candles, especially the 6 trade setups. There are only 6: GSTTMC for short, gap, support and resistance, trend, time and price, momentum, and candlestick. And you only really need to know, if you really want to trade conservatively, trade the gap trade, trade the candlestick. Momentum trades, very hard to determine when a momentum trade is going to be. And you'll be a better trader. Now, many days are not good for trading. And one of the indications of one of those days when I say it's not good for trading is when the market opens in the middle of the Taylor trading zone. Middle of the Taylor trading zone could go up and could go down. I like when the market starts up the day below the trading zone or above it, because then I know it's going to go through it down or through it up. And so I know that's going to be a very profitable day. And the rest of the days, leave them alone. Okay, so you can get the Taylor calculator at my site at timelessdollar.com. Here you go, timelessdollar.com. Click this link, Taylor Trading Calculator. If you want to know more about trading, if you need help to trade, if you want to learn how to trade, check out my courses. Trading Mastery for Financial Freedom is my flagship course. And I even have a free course, Avoiding Costly Trading Mistakes. Absolutely free, absolutely free. Can't beat free, right? But learn to trade, seriously. If you're going to trade, remember, most people don't trade profitably, don't trade successfully. That's because they don't know what they're doing, because they think they can just jump on and make a few dollars every day or a few $100, and it looks so easy. It's not easy. You really have to know what you're doing. Anyway, trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.